at India VIX now 57% higher. There's a near 22 level coming in on India VIX. That's the kind of fear that is getting induced into the markets. There may be any safe haven in this kind of a fall in the market. What should one do?
Yes, actually, I mean, the safe havens are the consumption space which is held by Government of India. So where Government of India is investing for consumption, and that is a space to look forward to. And there the choices are very clear. One is the defense stocks. So in this correction, like Majgaon is down say 9% or 9.5%. So BEL is down 5%, HAL. These are the companies you should be looking for investment perspective. And because government's expenditure is going to continue, and these sectors will continue to report good numbers with a healthy order book. So this is one area. The other area is infrastructure spend directly, like L&T or say NCC. These are the companies which in this correction should be important too. And the third space which I would be a bit choosy about is railway infra, for example, in Core International, companies like that. So to my mind, I mean, see, any day's closing is not very significant but as we discussed before the pre-open, that the correct opening won't be that bad and the market should climb over 22,000. So it has climbed that. Give it till 10 a.m. I mean, first 45 minutes, always there is a push from the buyers. After that, if it starts trading at current levels or 22,000 plus, then the sectors and stocks which we have discussed, even traders can start leveraging into them.
Okay. Kush, name a few stocks. What are you shorting?
ICICI Bank is I'm not shorting right now because I think ICICI is still near to the life high. So ICICI Bank is what I'm shorting with the stop loss at 1340. Target on the downside is 1250, below which we may even see 1200. So high risk traders can short ICICI Bank at current levels.
Okay. Dharmeshi, would you be, would you advise that somebody does definitely go towards, this kind of a fall and look at it as an opportunity to buy into any key stocks that offer that opportunity? I mean, like stocks which have been erstwhile wealth creators are down 15%. Is it, for the long-term investors, a great entry point?
It's difficult to say, Sakshi, because let's understand one thing: we are in a bear market. So in a bear market, there are sucker rallies on the upside. At the same time, corrections continue to happen during the in the course of the time. But I do think from investment perspective, if you're looking at least 1 year or 9 months kind of a time horizon, this is an opportunity. Allocate say 25-30% of the money which is lying on the sidelines to be deployed into the market. Go in a staggered approach rather than a full-fledged one-time go. And they again, as we discussed a few minutes back, the sectors which I would be looking forward, which has a government of India backing for their top line for the revenues. And there it is defense, railway infrastructure. These are three clear buys. One outlier which I would like to pick up in this fall is the Reliance Industries. So it has corrected quite sharply. There's a lot of value unlocking businesses happening out there. And it's a mouth-watering kind of a pricing for Reliance Industries. 1100, it's a very safe buy. So 1100, 1150, investors should be looking into that. The only advice would be don't go put all your eggs right now, get it staggered.
Okay, don't put all your eggs in one basket at this point in time. Be very, very careful with all your positions, viewers, at this point in time. It's a bloodbath on D Street. You are seeing an over 4% kind of a cut on the Nifty, although we're a tad bit recovered from the day's lowest point or the opening lows. 22,000 is with us. The Nifty Bank is, however, still lower in terms of the quantum and a sharper cut at this point in time. There's a 3% nearly a cut, 1,450 points of a downtick on that one. All the sectors are bleeding red at this point in time. Look at the Nifty CPSE index, 4% downtick. PSU banks, 4% downtick. Financials down by 3%. The Nifty Bank down 3%. Metals have lost their sheen. 7% of a lower tick is what you see on the metal space. Remember, this has been, something or a space that has been impacted because of the global demand and the impact of tariffs again. FMCG 2% down. This is still better off than the other indices because it is inward bound. It is based on your own consumption at this point in time, domestic demand. But IT sector, one of the biggest, weakest links that we have seen over the last few weeks when tariff talk had only been on the rise. You have seen an over 6.5% kind of a cut on the IT pack today. Oil and gas about 5% lower. Capital goods about 5.5% lower. It's an all across this screen a deep shade of red at this point in time, and something that probably you may not have seen in the recent history. But at this point in time, Kush, where do you see things going from here? Are we at the risk of breaching earlier lows or the recent lows as well at this point in time immediately?
Yes, definitely. I think, overall, you look at the pressure in the market, defense and all PSU stocks. I think we are seeing more pressure, and I think this tariff war is going to, get more deeper and deeper. I'm sure Trump has made it clear that, to clear their deficit, he's going to keep this tariff open. So I think, yes, still we are going to test new lows.